Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Kelly Yee. She's the Director of Research at IndexIQ, a New York Life investments company. And we are going to focus on innovation in the factor-based fixed income area. Thank you very much for joining us at MarketSite today. And what has driven your team to develop smarter solutions for investors for fixed income?
Thanks, Joe, for having me. Fixed income is an area that's dominated by active managers because of its complexity and liquidity, but it doesn't mean a rules-based quantitative investment process cannot add value. In fact, I've been living and breathing in fixed income investing for over a decade now, have really witnessed how a data and model-driven process could add value. With the proliferation of smart beta equity ETFs, I think the introduction for fixed income smart beta ETFs is long overdue. It's just another way of introducing science to help clients build better portfolios.
All right, and that was really the rationale behind creating these types of products.
Yes.
All right, so let's discuss problems, and these are the names of the ETFs, AGGP and HYLV. What do they solve in the fixed income market?
Sure. As you look at the fixed income market now, most of our clients invest in fixed income for yield and risk mitigation. In the current environment, both needs are challenged with interest rate and credit spreads still at low levels. And as Fed starts to increase interest rate and as we get closer to the credit cycle, investors are more likely to see a high volatility and low income environment. Like active managers, we're trying to provide solutions by dynamically pick the more attractive part of fixed income market and help investors meet their income needs and protect them risk mitigation on the downside.
So how should investors be using smart beta fixed income ETFs?
Sure, starting with ticker AGGP, which is our core fixed income ETF. It's tracking the IQ Enhanced Core Fixed Income Index that seeks to provide better risk-adjusted return for investors. We dynamically pick the more attractive part of the fixed income market, such as mortgage-backed securities, corporate bonds, and treasuries with different duration buckets, try to provide them better risk-adjusted return using the well-established momentum signal.
And HYLV?
HYLV, again, is our core high yield, low volatility ETF. If you look at the high yield market, it's being more popular because of its high income, but this asset class could also provide generate a lot of downside risk for investors. What we're looking to do is derive a quantitative measure that try to pick relatively lower risk bonds in the high yield market, and the end is a high yield investment strategy that tries to deliver better risk adjusted income and provide risk mitigation on the downside.
Well, bringing well-known factors in the equity space to fixed income, can you simply apply that?
That's a good question. The answer is both yes and no. So first of all, some of the factors, if they are backed by well-established research and investor behavior, like momentum and low volatility, could work in fixed income and other asset classes too. But when it comes to implementation, you really have to pick asset managers or ETF providers who have experience and trading capability in fixed income to really construct a portfolio that suits fixed income needs, which could be very different from.
All right, and to wrap up, reiterate to us why these type of products are relevant into 2018's market.
Sure, the fixed income market is becoming very challenging given the headwinds that investors are facing. They really need to think about being very selective on their fixed income investment. As part of New York Life investment, we have access to fixed income resources, and we're looking to really harvest the well-established factors and investment principles to help investors build better portfolios.
All right, well, thank you very much, Kelly, for joining me at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.